Signet Jewelers, which has dominant market shares in Canada and the U.S. with brands like Peoples, Kay, and Zale, is climbing today after a second quarter earnings beat. But high U.S. tariffs against India could hurt the company. For more on the stock, let's go to Jim Sanderson, Managing Director and Research Analyst at Northcoast Research. Thanks for joining us today.
Hey, thank you.
Tell us briefly, if you don't mind, just about Signet, what it's known for.
Well, Signet's business is focused on the bridal category. So one of their biggest businesses is engagement rings. And then secondarily, they have a very important fashion segment. And recently, we've seen that fashion segment benefit from growing demand, consumer demand for lab-grown diamonds, which offers a nice bump up in fashion jewelry, but drives a better average unit revenue and better profitability.
Okay, so they do rely on imports from India, which are now being tariffed by the Washington administration 50%. How much of a blow could this impact the company, give the company?
Well, it's a serious issue. I think about 50% of Signet's product is imported from India. Clearly, lab-grown diamonds is an important growth driver for the company. And what they really have to figure out this year over the holidays is how to manage the assortment, the pricing, and the discounts that they're going to offer in the marketplace, assuming that they're going to have to pay that incremental tariff. We just don't know how long that's going to last, so it makes it very difficult to plan and plan profitably. So we think it's a bit of a headwind that the company's going to have to really wrestle with over the next 8 to 12 weeks, especially.
And I imagine the holiday season's a big time for them. They have to stock for the holiday season and Valentine's Day soon.
That's exactly right. It just couldn't be worse timing, I guess, if you're a jeweler, because this is prime time for you. You really want to be able to be flexible in your assortment and be flexible in the type of products you put out there. You want to be able to pull in product that you think sells well, reacting to how the consumer reacts to your holiday assortment. And having these tariffs, it's just going to make it that much more difficult because you're going to have to renegotiate some of the pricing for product that's pulled in, especially after September, when you saw that meaningful bump up in tariff rate from 25 to 50%.
Let me also ask you about consumer discretionary spending. People have been worried about the economy. Does something like that affect this kind of company where people want to sort of get the best they can get for the money, but might decide to, size down in stone, for example, with uncertain times?
That's right. I mean, the problem with jewelry is it's a discretionary buy, it's a discretionary purchase. And I think anytime the consumer becomes a little bit more frugal or more concerned about their ability to spend, they may want to pull back over the holidays. You really want that consumer to be out and about, so to speak, willing to spend on gifting. So it's going to be important to have the right price and assortment of broad price points. And that really adds a level of execution risk for Signet. They really have to figure this out and adjust and be nimble, and it makes it tougher when you have this headwind on costs that could actually impair consumer demand for the next couple of months as well.
Jim, who are their competitors, and do their competitors also rely on India for supply?
That's right. Most lab-grown diamonds are manufactured in India. So there's a level playing field for the most part that doesn't only impact Signet, but their competitors, which would be, leading department stores like Macy's. You also have mass retail like Walmart, but especially the thousands of independent jewelers throughout the country. That's one of their biggest competitive sales channels. And they also are dependent upon India for the import of those products.
Where is the trend going for lab-grown stones, diamonds in particular, compared to sort of mined diamonds or mined stones?
Well, we've seen a huge ramp up in consumer demand for lab-grown diamonds in the bridal category. A lot of consumers, they're coming to the category. They realize that because lab-grown diamonds are more affordable, they can actually get a bigger bang for their buck, so to speak. So you can maybe afford that 2 to 3 carat diamond engagement ring that you couldn't afford if you were paying a natural diamond price. So we've seen a real acceleration and momentum in sales on lab-grown. Now, the lab-grown diamond category hasn't really taken off as much on the fashion side, but we think that's going to come into play, hopefully, over the holidays as we see more assortment. For example, Signet, a year ago today, their sales mix in the fashion segment was about 7%. That's actually doubled to 14%. So you're starting to see a lot of penetration of lab-grown diamond in fashion, whereas for the bridal category, it's started to stabilize. It's about 50%, give or take.
Okay, so what is the fashion side of jewelry?
The fashion side would be anything from, diamond stud earrings to a diamond necklace to gold hoops to a gold chain, anything that would be fine jewelry with, let's say, a gemstone in it, but it could also be something that's everyday, gold bangles, bracelets, things like that folks want to wear, to the office for fashion purposes, for want of a better term.
Okay, so as you know, we had Taylor Swift get engaged, and I'm wondering whether or not when you have these big celebrity engagements and everybody shows off the ring, does that give a bump to companies like Signet?
Well, it did give a bump to the stock. And I think the next question we want to understand is, does it really change consumer behavior? And what we mean by that is, does it make consumers that are considering, let's say, an engagement ring, maybe rethink their choice of a more affordable lab-grown diamond? Maybe they're going to go back to the natural diamond. They're going to think about Taylor Swift and how she kind of sets a model for what the consumer might want to have. And they may rethink that choice a little bit more. And that could add some consumer demand back to the natural diamond, which I think a lot of folks now are looking at the natural diamond category, and with Taylor Swift especially, as an item that is more authentic. It's not perfect, let's say. It's curated. It's more artisanal. It's more design oriented. That event with Taylor Swift may actually increase natural diamonds in the choice set going forward.
Got it. Jim Sanderson is the Managing Director, Research Analyst at Northcoast Research. Thanks.